Hey, what's up everyone? This is Evan Carthy from evancarthy.com, and today is Tuesday, August 8th. Markets are closed, so let's go over it. Crazy day in the market, but a great day. So really the story of it is going to the spiders, or the SPY. It's an ETF for the S&P 500, and this is one of the main things I'm watching right now for what the market is doing, because here we have, I'll go and we'll use the 15 minutes time frame for this right here. Here we have, spanning 1, 2, 3, 4, 5, 6, 7, 8, 9, be 10 days. The market opens up here in about 16 minutes. 10 days for this trade set up right here that still has not gone and gotten filled. So what started this was we're using the green line for the pitchfork trade, which is the 1.146. One for it, and see we had the oops, didn't want to do that. Let's get that back on there. So we had a close above it, and so that signals that we are looking for the next. That's the signal bar, and then the entry bar is the next bar when it hits the green line. So there we have the closed above it, closed. Sometimes you get like right on it right there, so I don't consider that enough to be closing above it. So we get it squarely closed above it, yeah, and then the next bar is the signal bar because it hits the green line right there, and so that signifies watch the races. So the original entry we have is the 1.146. It's that orange line right there. Obviously that did not get hit. So when price drops back down, we move it in two other ways. The first way is if price hits the median line, which is the red line, which it did right there. So when it does that, we move it back to the original entry right there. That's where the exit moves to. But if price keeps going down further, which this one's kind of a weird setup, and goes down and hits the opposite way between the 1.146 and 1.414 area right there, then we move the exit down to the 50% line, which is the top of that green line right there from the Fibonacci retracement level, and that's where it stays and it's not going to move again. So what's been happening is normally the 1.44 area is kind of like the line in the sand. It really doesn't break down much further from it, and we can see it did get kind of decent support, broke down a little bit, but then popped back up, popped back down, but then yesterday popped back up, and then today gap down, looked like it was going to go even further down, which it did, and looked like it's just going to be a really negative day in the market because a bunch of banks got downgraded, and that's the way it started out when it opened, but then it found its footing down here and has been going up ever since for it. So what that leads to is we're still looking for up here getting hit, and this created another gap right here, which is starting to get filled right there. We can see the other day when it opened up, we had a gap here to the upside, and today it gapped down to fill that. And then we still have, from the gap down today, we still have, it needs to get filled right there. Then from several days ago, we have a gap. I'm just drawing the box so it's easier to see. We have a gap all the way up here. So these gaps most of the time go up there and get filled. They're kind of like magnets for what you're kind of looking for. And so when we start getting a couple going down the same way, it's kind of like magnetizing them, going in that direction and get it filled. So that one's getting close to being filled. And then we have this one still up here. So I am still, even though the market has been, we had that drop down, rally back higher, drop down lower, rally back lower high, drop down lower. It started creating lower lows and lower highs. But tomorrow, if we can get this to pop up over here, break this level right there, I think the bulls will be back in control. And I eventually will be looking for the market for the SPYs to back up to 454.92. So we'll say 455 since it's a nice round number for it. So we're still looking for more bullishness in the market right there. So that's why the SPLYs, in my opinion, are the ones that I'm looking at right now. So, but today we had a bunch of, the short setups go ahead and get filled, which didn't get filled last week. So here was one from last week, another trade right here. Here it closed below the yellow line, which is the 1.618. It closed below it. There's the signal bar. And then the entry bar is 2 bars over when that bar came up and hit it. So all we do from there is we just draw the Fibonacci retracement level from previous high to that low until the bar, we got the entry bar, and there we go. So it looked like it was going to go down and hit it last Friday. It obviously did not. Rallied back up all the way to the 61.8, just north of it. And then we had a huge sell-off today where it came down. There's the orange line, the 1.146, and hit that target and is done. And this is also, if you notice, the teal lines that's in between right here is the daily extension levels. So hit the daily extension levels plus target. So that one is done. That short setup is done. So we don't have any more short setups. We're looking to get filled for the S&P 500. Going over here for the Russell 2000, it was a great step today that I actually did get in, and I've added 2 more bars to the Fibonacci extension level going the other way, because one thing I've noticed is it's between the 1.73 and the 200% Fibonacci extension level. All the 1.73 is the square root of 3. So use 3 square root. There we go, 1.73, and that's how I got the 1.44, because that is the square root of 2 right there. So the square root from these whole numbers do tend, for whatever reason, shows some terms of support and resistance on the different levels. I've never seen anyone using it before, the 1.44. I didn't come up with it. A friend of mine did, Willie. He's the one who introduced me to that, and how the square roots from some numbers do have a lot of turning points, where they're either support or resistance points for it. So one thing I noticed was at the 1.73, which is right here. You can see it bounced off that today. Didn't even go, close below it at all. This is on the 15-minute chart, and that was the support for the day. But I think I'm going to leave that level on there at the 1.73 to the 2, because that, before I thought it was 1.4, 1.44 is kind of like the low, but now it looks like this is the area right here where if we do get that extreme sell-off and it pushes through the 1.44, this is the next area to look for either support or resistance. So we had the Fibonacci trade, so there we have using, and this is just using off the what is that? 1.146, the green line right there. We had the close below it. Then we had the, no, you know what? I'm sorry. This is actually a long trade right here, because here it is right here. We have the close above it right there using these 2 semaphores right there. Close above it right there. Price came down, hit the median line, so that means the exit goes back up to the entry. Obviously, that never got hit. And then price went all the way down to the other way, hit the 1.146, so that moves the exit to the black line right here, which is just south of the 50% level right there, and that's where the exit is. So the other day, I had gotten in right at the 50%, and then got in right down here below, just above the 1.146, and then on Friday got out just right about over here, because I was looking forward on Friday, thinking that perhaps we were going to get some more, another push down before we finally get that push up and hit it, but that didn't happen until today. And so I got in, where did I get in? All the way down here at the 1.44, because I figured if we were going to get that push down, it'd come to that extreme level right there. Plus, it was right in the middle of the daily extension level between the 1.146 and 1.44 of the teal lines, which are, it's using the previous day's highs and lows, which give us the current day's extension levels. And price actually went obviously lower than that, all the way down to the 1.73 from the trade that we're looking at right now. And ever since then, found huge support, and I got out before the day closed, right over there. Just get out of it, because if the market does open and it sells off a little bit more, I'm hoping that we'll get like a little bit of sell-off down to, like, somewhere down in here, something like that, and get back in. And then I look at getting out. I always get out my exit a little bit before the hard exit, so somewhere like right around there would be the goal for that. So that's the Russell 2000. And then for the Dow Jones, this one I'm not going to go over. It's the same setup as the other ones. This one, it came extremely close to hitting the 1.146, but it's still a little bit of ways away. So this is the only one I don't like of everything, because let me just forward over the NASDAQ. The NASDAQ came and it hit this one. Here's another short setup right here. You can see today price came down and hit it right here, and also is in between the daily extension levels, so that one is done. So all of the markets except for the Dow have hit their short extension levels. So it may be just one of those times where, and I hate doing this, where price just didn't get, sometimes it'll be a tick or two away, or somewhere like right down here, and we'll just pop right back up. Sometimes it doesn't hit the hard exit every single time, so I always get out early. But being this far away from it, I really don't like that. So we're just going to, you know what? Well, oh, well, here we go. That's my problem right there. I just messed it up. Look, here's the close below it. Look, there's the close. I just realized that. Close below it. That's the signal bar. There's the entry bar. The next bar hits the yellow line right there, and there it is. So let's see what that looks like. And there it is. Okay. So ignore, I'm sorry I wasted your probably last 90 seconds of your life. Ignore that because it did hit it today right there. Look at that, right off the 1.146. So you know what? All the short setups that we were looking at are completed for all of the markets. SP 500, Russell 2000, the Dow right there, and also the NASDAQ. So they're all done. So there's nothing really holding the market up of any short ones that need to come and get filled for it. So I'm looking for more bullishness in the market. We are in a, I take that back because it is actually a short setup right here in the S&P 500. We can see right here, I'm sorry, the NASDAQ. We can see right here, it closed below the 1.146. There's a signal bar. It came up and hit it right there, but came down and hit the target, the 1.146 level right there. And then we have the break below it right there, so we wait for the price to come back up and hit it. And when the entry bar wasn't until right there, so we just draw the Fibonacci from the high to low. So, okay, I take that back. Most markets, except the NASDAQ, we do have this short setup. This is a target all the way down there. Right down there, 15,175 for it. But if the SP 500, Russell, and Dow continue on its way up, I would not be surprised if if a big rally does happen, comes and hits what time's at 4:30? Yeah, comes and hits at least, if not the median line, as it keeps on going up, because the time's going to play a factor, but hits the 1.146 the other way, and so then that would move the exit for it all the way up to right there. So I'm bullish on this market. So with that said, we'll probably get a huge like 2.5% move down tomorrow. now that I'm looking for the market, at least for the short to intermediate term, especially from the S&P or the spiders, the ETF for the SP 500, looking for it to SP 500 to lead the way back up in these levels. And so we said that drop was about 454, so we'd be looking at right up in here would be where it would be, I believe, yeah, where we have that gap or a gap for it. So you're looking at, close to 4,600-ish for that area. So another about 80 points I think we can get in this market right there. But anyways, that's the market. A lot going on right there. Some great trading. Take care. Thanks. Bye.